Thank you for joining us, everyone. We're going to be talking about insurance companies today, giving you guys some tips and tricks about what to do and what not to do. Give it another 1 minute and we can start. We can get going. So we're obviously, everybody knows we're a law firm. We do a lot of personal injury and property damage and business work, business cases. And we decided to do this topic today, insurance companies, friends or foes. And probably people are saying, well, you guys are a law firm. What does this have to do with law firms? The concept of this is to let everyone know what we deal with on a daily basis against insurance companies, and the title of friends or foes. Basically, the insurance companies typically pretend to be your friend, but for us, there are daily foes when we're representing our clients against them and trying to get them justice. Unfortunately, it's not always smooth sailing. Unfortunately, it's not always the insurance companies being on your side, regardless of what kind of lingo they market. But most of the time, what we see on a daily basis clearly shows that they're really not your friends. We're not here today to pinpoint out certain insurance companies saying one is better than the other or not, but obviously there's the usual suspects of who's good and who's not, and I think it's pretty clear from everyone's experiences as to who's who. So the reason why we're talking about that today, like I said, is we deal with insurance companies literally on a daily basis, whether it's auto, whether it's homeowners claims, business claims, life insurance claims. So this is what we do. Almost 95% of our work is related to insurance companies. So we're here today to talk about different issues. We want to kind of break up the discussion into two. I want to introduce Natalie Suri. She's one of the lawyers in our office. Eileen Keusseyan, she's also one of the lawyers in our office. Natalie works almost primarily on personal injury cases. Eileen works on business cases and property damage litigation, insurance bad faith cases. We're going to have certain discussions about different issues today. I wanted to kind of break this up into two different areas. The first being everything that happens up to the point where you purchase an insurance, when you go to your agent or when you renew an insurance, what happens up until the time where you do your application, you give them information, what responses you get from the agents, and what happens in that process until they bind your insurance policy. And then the second part would be what happens after you have a loss, whether that's an auto accident or whether that's a home property damage case, water loss, fire loss, burglary, earthquake, or whether it's a business loss, business interruption. So what happens after you have a loss? And we've come up with a theory of call us before, and that's basically call us before you purchase your insurance and renew your insurance. We offer a no-fee service of reviewing insurance policies. A lot of people have taken advantage of it. You send in your information, all your policies to us. We'll review it for no fee, for free, and we will tell you what to change, what to add, and give you all those insights as to what we've seen and what we see on a daily basis from a legal perspective. Regardless of what your agent tells you, regardless of what they try to convince you, and we're going to get into this whole oh, that's enough coverage. Oh, you have full coverage. You have, you have enough limits. Your limits are high enough. These things that you're told by some agents or by some insurance companies couldn't be further from the truth. So we've seen it way too many times. People getting shorted because they didn't listen to, not that they didn't listen to us, but in general, they weren't given the right advice. They weren't advised properly. They weren't given the right information. They themselves didn't ask the right questions. And as a result, they either got the wrong coverage, or they got low limits, or they left out certain coverages. So that's kind of why, it's because we see this on a daily basis from a legal perspective. We wanted to put this information out there and and get it to you, get this information to you, so that when you guys either purchase a new policy, or if you're up for a renewal, you know what questions to ask, you know what you should do in terms of your limits and coverages. So like I said, we're going to kind of break this down into a couple sections. Natalie's going to be talking about some personal injury issues, auto policy issues, and what happens, or what you should look out for when you're purchasing your policies or reviewing. Actually, we urge everybody to review. Again, like I said, no fee. You send us your policies, we'll review it for you. We'll get it. We'll tell you what to change, what to add, what to subtract, what to increase. And we will do that as a service to all our clients. So Natalie will discuss some of the auto-related issues to look out for while you're either purchasing or renewing your policies. Nat, take it away.
I shall. So I want to talk about 3 topics in the realm of automobile policies. The first one being, and I think this is really important and it often gets overlooked, selecting the right insurance company. It's not just about how much money or how much insurance coverage you end up getting on your policy. It's just as important for you to choose the right insurance company from the start. I'd like to just emphasize before anything that no company is your friend. They are all your foes. None of them, and I'll repeat, none of them have your best interests at heart. But that being said, some are more favorable than others. I receive calls all the time from clients who make comparisons about their cases and others. They wonder why their neighbor's case settled quicker than their case, or why their insurance company offered more compensation on a seemingly more minor accident. And the key to understanding these differences really just boils down to which insurance company was involved. Every insurance has their own methods of evaluating and analyzing cases to which they end up putting a dollar figure. And these methods tend to evolve over time between, specific insurance companies as well. So if a particular company was great 5 years ago in extending coverage, it doesn't necessarily mean that they have the same methods and standard today. Sometimes these companies go through corporate changes, and that impacts how they analyze their cases and how they extend coverage on the cases. As Harout said, we don't want to sit here and expose different insurance companies on this live right now, which one's good, which one's bad. But, we do encourage you guys, call us, ask us. We'll go over our thoughts and our experiences as to what insurance companies are more favorable to deal with. So the next time you reach out to your broker and you tell them, I have these cars, get me the best coverage that you have available, you could tell them, these are the cars that I have that I need to get insured. Can you get me deals on these specific 5 different insurance companies? You're not trusting the broker entirely to pick the insurance for you. And, that being said, you also want to be knowledgeable about when your insurance even comes into play. So if you're in an accident, let's just say hypothetically speaking, and an accident wasn't your fault, naturally you would think, it's not my fault. I didn't do anything wrong. The other side should just cover everything. Well, in an ideal world, yes, that's the case. You would hope that the other side is adequately insured, they cover everything, and you don't go through the headache of dealing with your own insurance company. But in California, I'm sure most of you know, and if you don't know, the minimum coverage currently is a 1530 policy, and that means it's 15,000 per person, 30,000 per accident. Most drivers carry this minimum policy. So God forbid, you get into an accident and you're seriously injured, you're looking at the person that caused the accident to potentially have a 15,000 policy. So what happens in the case where your hospital bill alone exceeds 15,000? Well, that's when your insurance comes in. Okay, this is when it's called underinsured motorist. It's when the other side is underinsured. That's when your coverage steps in and compensates you for the other driver's lack of sufficient insurance. Most people think that, oh, well, once their insurance gets involved, then their premiums are going to go up and it's going to impact them negatively. That is not true when the accident is at no fault of your own. So sometimes you may get in an accident and the party may not even be insured at all. Right? There are a lot of times this happens where someone's just uninsured or they ran away from the accident. So these are hit and run accidents, right? There's no policy to locate and to go after. In those situations, you under your own policy should have uninsured motorists. So underinsured motorists, uninsured motorists, they're typically under the same umbrella. And that's when these are the two situations in which your own coverages would end up essentially coming into play. So the biggest problem that we see now is the limits, right? Either you went to your agent and you asked them to give you coverage, full coverage, or whatever it is your discussion was, and they didn't implement any or UIM, which is uninsured or underinsured motorist coverage, and no rental insurance, or they did give it to you and it is under your policy, but it's minimal. Right. So hypothetically speaking, they would, let's just say, sell you a policy that has 100,000 per person, 300,000 per accident liability coverage, which is, let's say you caused the accident and the other person goes after your liability coverage, but they may only add 1530 under your okay, or no There is absolutely no reason for you not to have the same amount of coverage for yourself, protecting yourself and your own interests than that you're giving to the other person. And most of the time, increasing your limits from 1530 to 100, 300 under is so minimal when it comes to the financial aspect of it. It barely impacts your premium. So it's worth asking these questions. But the problem is, the biggest problem is no one knows to ask these questions. So they just trust that their insurance agent is giving them everything that they need. But, you need to be mindful to familiarize yourselves with what each of these policies even mean. What do you need? Why do you need it? And that way, once you're going through your coverage with your agent, you could, talk about these things. Why is this low? Why don't we increase this? So our recommendation naturally is to purchase the maximum available coverage that you can under So some companies offer 250, 500. Some companies I've seen 500, 500. I know Tesla recently I saw has a 300, that's 300 per person, 300 per accident. So at the very least, I mean, if you can't, get the 250, 500, at the very least, try to get the 100, 300 with the matching And you might be thinking, well, why get 100? Why not get 100, 300 for and just get 1530 for liability? That doesn't work. They have to, your has to be equivalent or equivalent with your liability. So you can't have more than liability. So, just be knowledgeable, ask these questions, call us, we will guide you through it. Just call us first before you make these decisions. It really, really is important. And again, it's free of charge, so take advantage.
I want to interject here and want to talk about one thing. You know, we obviously have a lot of, and I'm sure there's going to be people watching, a lot of friends and family who are agents and who are brokers and insurance brokers. You know, at the end of the day, you know, we're not saying that everyone is like this, but at the end of the day, their goal is to sell you the policy. Okay, so if they're going to present you with a policy package, with premiums that seem favorable to you, that's not necessarily, they're not necessarily doing you a favor. Okay, so if someone's giving you, again, hypothetical numbers, a premium of $1,000 a month, for X amount of coverage, for $1,050 a month, you might be able to get the next level up or 2 levels up. You know, so like Natalie said, you have to ask. You have to ask, what can I get more? Is there more? What's 1 level up? What's 2 levels up? You know, obviously, like I said, their goal is to sell you the policy. You're gonna buy the policy. It's just make sure you buy the right one, right? So the insurance agent's job, the insurance agent makes money when you give them, when they write the policy. The insurance company makes the money when you pay the premiums, and they pay out as little as possible. You know, before moving on to the homeowner side, you know, I want to bring in a couple examples, and this is all from literally from the annual reports of the insurance companies themselves, from their published annual reports. I'm going to give a couple examples, and again, this is not about saying one is good, one is bad, or as far as we're all concerned, they're all foes for you. So you know, just to give you an example, State Farm in 2022 had 91 million insurance policies in place. Okay, 91, not $91, 91 policies. They ended their year with $1.1 trillion of life insurance. Their homeowners policies, their homeowners side, earned premiums of $27.6 billion. They paid out $20 billion, and they had some expenses. They almost made $1 billion in net gains just from the homeowner side. This is State Farm. I can tell you about you know, Mercury. Mercury had over almost $4 billion in net premiums earned in 2022. AAA has total assets in 2022 of $411 billion. Okay, this is the assets they have. Travelers earned $33 billion in premiums in 2022. These numbers are not hypothetical numbers. These are from their annual reports. We're talking about billions and billions of dollars of premiums that are being charged and collected, and we're paying that. You're paying that. All our clients are paying that. These are significant sums. This is not a joke. These are large companies with a lot of influence in this country, on everything, on politics, on business, on everything, because you know, their premiums go up, every cost goes up. So across the board, they're a very powerful industry. So, and they have their experts in everything. So if you think that their experts are there for your benefit, they're not. Their experts are there for their benefit. So if you have a loss, shifting into homeowners policies, for example, well, you know, I do a lot of, I work on some homeowners policies, homeowners claims. And again, the biggest problem that we see is the limits, the low limits. You know, you didn't buy the right amount of coverage, the structural coverage for your dwelling, for your house, the contents coverage for your personal belongings, the additional living expenses, the rental expenses. If you do have a loss, how much, you know, how many months and how many dollars are you covered for them to move you into a similar home while you're doing the claim and the repairs. You know, all these things come into play, and unfortunately sometimes we get I don't want to say duped, but we kind of get convinced into purchasing some policies and purchasing some limits which are not enough. Sometimes you ask for lower limits. Sometimes, you know, the premium seems a little bit high, but, you know, this always comes into play after you have a loss. So when you're buying homeowners policies, or when you're renewing your policies, you have to look, what's my structural coverage? You know, home prices are up now. Construction prices are up now. In 2020, what you had for coverage might not be enough in 2023. You know, even what you had in 2021, 2022 may not be enough. You know, they're automatically renewing it. Yeah, once in a while they'll give a little bit of an automatic bump, but it's a few percent bump in the coverage. It's not real in terms of what it's actually going to cost you. So something, let's just say you have, you know, $500,000 to cover your structure. That may have been the case in 2019 or 2020, but in 2023, that cost to rebuild your house might be $750,000. But no one's looked at it for during the time of renewal. No one's really put some time or effort into reviewing it on your behalf. And here you are now, if you have a loss, and your limits are low. And then another thing that we deal with so often, all the time, you know, what's covered in these policies. So I'm sure everyone's seen, your policy comes, it's 70 pages, 80 pages, 150 pages, depending on which company it is. The vast majority of those pages is exclusions. What's not covered, what's limited, what do we not pay for, what we pay for this, but your limit is this much. I mean, if you don't know, the average person, if you take a look at the policy, sometimes we look at these policies and you got to read something 4 times to kind of comprehend what it means. It's just meant for you to take a look at it, go through 1 or 2 paragraphs and say, whatever, here, let me sign. This is, you know, this is good enough for me. So that's kind of why they do what they do. You know, contents coverage, personal property coverage. Okay, jewelry. You have jewelry, it's limited. Your standard homeowners policy, $2,500, maybe $5,000. Art, limited or excluded. Rugs, $10,000 if stolen or burned. You know, watches, not covered, very limited. You know, all these little specialty items which you know a lot of people have, and regardless of what the dollar amount is, the limits are so low that you're not going to get it covered. So what do you need? You need to ask your agent, okay, I have X amount, I have a couple watches, I have some you know, engagement ring, jewelry, you know, bracelets, necklaces, whatever the case is, it's worth X amount. How much is it going to cost me to insure these in a personal articles policy? So these are the things that you're not told, you don't know about, and all we hear is, well, I thought we had full coverage. Yeah, you had full coverage, but for jewelry's covered for $2,500. Is that going to be enough in today's world with today's gold prices? No. Today's watch market, no. So it's just you have to put some effort into making sure that you have the right coverages. You know, these topics maybe seem to be, you know, they're not as fun. They're boring. Who's going to look at that policy? That's why we're here. Let us do it. We'll look at it for you. We do this every day. You know, we can look at it and we can easily tell you, you know what, change this, add this, subtract that. This is not covered. You know, in California, flood is not covered. You know, over these most recent rains, we had a lot of issues saying, oh, you know, we were up on, you know, the hill, water came down the hill into my living room, into my bedroom. Well, that's not covered. Flood water coming in from the side, so the house is not covered under your standard homeowners policy. No one knows. No, I don't say no one. Most people don't know this, and more likely than not, you were not told this when you were buying your policy. So there are so many things, so many little nuances that that we're not told, that you're not told, that is not in the interests of either the agents or the insurance companies to tell you that you're missing coverage or your coverage is low. Like I said, it's in their interest. They want to write, like Natalie said earlier, insurance companies want to write 15, 30 policies. They want to write $15,000 policies across the board because why? Because at the end of the day, when they're doing their profit and loss statements, when they're doing their exposure, when they're presenting to their annual meeting, their exposure drops if their liabilities are low. So they don't want to give you 250, 500 policy right off the bat. They don't want to give you $1 million, $2 million coverage on your homes. Some insurance companies don't even do it. They tell you got to go, we don't insure you here. We don't insure you, you're in a fire zone. We don't insure you, you're in a flood zone. We don't need, like, it's always one reason or another, either not to insure you or not to give you enough coverage. So from the homeowner's perspective, again, it's important. Not everything is covered. Your personal property is covered, but there's limits. Your structural issues are covered, but be careful of your limits. Your additional living expenses are usually covered, but make sure you have enough. What's the rental value of the house? They have a responsibility to put you in in a similar home. So if you have a 3-bedroom, 3-bath house, 4-bedroom, 4-bath house, they can't put you in a 1-bedroom, 1-bath apartment. It doesn't work like that. They have to put you in a very similar home. So what is the rental value of your home today? If it's $10,000 a month and you only have $5,000 a month of coverage, then you're underinsured. So if you don't look into this, if you don't have anybody look into this for you, if you don't ask these questions to your agent or to your insurance company, no one's going to do it for you. So you have to do it yourself. You have to take the initiative and make sure you have the right coverage. Again, like I said, call us. I didn't even mention our number yet. It's 877-554-2226. That's 877-554-2226. Or you can visit our website, keosianlaw.com, or any one of our social media platforms, Instagram, Keosian Law, Facebook is Keosian Law. Obviously, we're live now. So just call us, send us your information, and we'll do it for you. I'm going to shift over to Eileen to talk about the business side, business policies, and what is required for that area.
Okay. Thanks, Harout. Well, we have the same issues in business policies. When somebody usually has a business, they know if they're like a tenant or leasing space, the landlord will require a general liability policy. General liability insurance, though, it only protects you against lawsuits or claims filed against you by people outside your company. So that, if they suffer bodily injury, like a slip and fall at your place of business, or if their property is damaged, or if their reputation is harmed in some way by your business, then your general liability insurance will cover them. And then most businesses also get workers' comp if they have employees, and that's to protect the employees. And if they suffer some sort of an injury while on the job, that covers them. But then surprisingly, many businesses that have come to us, they don't have commercial property insurance, for instance. And if you don't have commercial property insurance, which pays out for damage or loss to physical property, to your building, to your inventory, to your goods caused by something like fire, then you're not covered. At the same time, if you get commercial property insurance, it may not cover you for water damage. So you have to make sure that you have the rider or the attachment or the endorsement and not the exclusion for water damage that's caused on your business premises or in your store. Then you'll go ahead and maybe tell your agent, I want commercial property insurance. I want to make sure that my business property is covered. And then they don't tell you that unless you purchase what's called loss of income, business income insurance, then you're not covered for that. So if you have damage to your property and you have to close down your business, or for some reason you can't operate the way you were meant to operate your business, and you lose money because of that, unless you have loss of income insurance, for the money that you would be making at your place of business, you're not going to be covered for that. So you have to make sure you have that in your policy. And of course, the best way to do this is you should be asking your agent or your broker for a complete business owner's policy. The business owner's policy has the liability section of it, the liability part, and the business property, loss of income, interruption of business coverage as well. So if you don't have that package, you're not covered. Now, even if you have that package, there are all these exclusions. So you have to make sure that you ask your broker or agent about, well, what's excluded? What's not excluded? You know, we have several cases pending. For example, we have the huge case pending when we had all of this loss of income coverage available to our clients when we filed for loss of income during the COVID period. So many businesses shut down and they thought, oh, well, I have loss of income coverage. I'm not making money, so I should be covered. Well, surprise, you're not covered for many reasons, but one of them was because of an exclusion called the virus exclusion. And COVID was excluded. So we couldn't even pass step 1 to get to step 2 to see if you would be covered or not, even if there was not a virus exclusion. The point to this is you have to review everything. You have to review your entire policy. And for example, if you have a certain amount of inventory, like Harout was referring about your, personal property in your home, if you have inventory in your business, you have to review it every single year. What you had last year may not be the same as this year, or what your projected inventory is for the following year. You have to make sure that you have enough coverage to cover your inventory if it suffers damage. For example, we had a case where we had damage to property at the business because of the riots that happened during COVID. So that should be covered. But if you're covered for example, $50,000 of inventory, and at the time you had $200,000 of inventory burnt during the riots or whatnot, it's not covered. So you have to make sure that every year you keep proper inventory to see what you have and what you don't have. And even what's more important is documentation of that inventory. When did you purchase it? How much did you purchase it for? Do you have any outstanding orders? Are they paid for? Are they not paid for? All this is very, very relevant in business insurance policy. Never, ever forget to add loss of income. It's very easy to forget that because agents and brokers usually don't talk about that. Sometimes it comes as part of the policy, but more often than not, it does not. And the one thing that you do have to pay attention to, it's very easy to inflate inventory when you're purchasing insurance, or to say that you have certain items of value at your business and you buy coverage for that. Then a loss occurs and they ask for tax returns, and your tax returns don't match what you said in your initial application or your renewal. So you really, really need to be careful with the documentation that you keep, with the financial information that you provide to your agent, to your broker, to your insurance company. And just keep remembering that before you purchase that policy, before you even sign on any dotted line, call me, call us. We're here. We'll review it for you.
Thank you, Eileen. One thing I forgot to mention, which applies to both homeowners and businesses, that's not covered under these policies, is earthquake.
Right.
The biggest thing. I mean, we've had a little shakings here and there over the last couple of months. Earthquake is not covered under your homeowner's policy. Earthquake is not covered on your business policy. Earthquake needs to be a separate policy on its own. Yes, it's a little costly. It can be a little costly, but at the end of the day, if you don't have it, and if an earthquake does happen, it's going to be worse at that point than it is if you try to figure out how to get this coverage added to your policy. So again, earthquake and flood are not covered under your standard homeowners and your standard business policies. Okay. So shifting over to another area that we're doing a lot of cases on, we're about to file multiple lawsuits. Then that's in the life insurance arena. Specifically, we did some clips on this before. specifically on the living benefit riders that people have been selling through these, I call them scams, sham companies, that are total scams and pyramid schemes, that people are getting lied to and forced, not forced, but convinced to buy these policies, saying that living benefits, you have, if something happens to you when you're alive, your living benefits will kick in and you're going to get coverage, and they'll pay you X amount. And wow, I mean, Eileen can talk about this a little, but that cannot be further from the truth. And like I said, we're in the process of filing multiple lawsuits against multiple companies and agencies who lied to, misrepresented to so many people. And Eileen, maybe briefly discuss some of the details there to have them send us those policies as well.
Definitely, those policies should be sent to us, because it's just crazy how they were misrepresented to. So what a living benefit rider is, or an accelerated death benefit rider is, it allows you to draw basically money against your life insurance policy, and you are able to access your death benefit while you're alive if you have a qualifying factor, such as a chronic illness, or let's say even if it's terminal or not, but let's say you're not able to perform certain daily activities, such as dressing yourself, cooking for yourself, bathing yourself, whatnot. There are a number of those that if you're unable to perform, then technically you can draw on your death benefit during your lifetime. But here's the kicker. So if you have, for example, $100,000 life benefit, and your insurance company, and this is across the board, it's not limited to just one insurance company. It's crazy how a majority of insurance companies are convincing you to purchase this. So if you have $100,000 policy, and let's say you're able to draw 80% of that, or 70%, whatever, let's say 50%. So you think you would be able to take $50,000 out of that policy during your lifetime to pay for whatever you need because you can't take care of yourself. You could do that. And when you sign on, your agent will tell you, oh, yes, you're going to get $50,000 during your lifetime, because, if you're ill and you need people to take care of you, you can get that money. But what happens is they say you can take that $50,000. There is a very, very complicated formula. I can't tell you how many times I've read it. I cannot understand a big part of it because I'm not an actuary. An actuary is someone who sits there in life insurance company offices, coming up with all these calculations of how to reduce what you would be getting. So what that does is the $50,000 that you think you're getting would be reduced by several factors. Your age, if you're young and if you still have a long-term, life expectancy, if you're in your 20s and 30s, there is a formula that is provided for your life expectancy, and it reduces that amount. Then it will reduce it by whatever interest the insurance company felt that it would be earning while you're paying the premium for your death benefit. But meanwhile, you're trying to pull that money earlier in time. So whatever interest they feel they're losing, they will reduce it by that amount. So at $50,000, if you believed you were going to get a $50,000 accelerated death benefit, they will come to you with only $5,000. It's crazy. But
if you're lucky,
the worst part is even this. You'll get the $5,000. Let's say you want the $5,000. However, you applied for $50,000. So your actual death benefit at the end of the day will be still reduced by $50,000, whereas you're only getting $5,000. So what happened to my $45,000? Poof, disappeared. And this is where the misrepresentation is. This is where the lawsuits are going down against all of these insurance companies, brokers, and agents. So definitely look at your policy. If you have a life insurance policy with an accelerated benefit, a living benefit, chronic illness benefit, there are several different terminologies. Send it to us. We'll review it. We'll tell you what your rights are.
We deal with these insurance companies on a daily basis. We have our fair share of problems with auto carriers, auto insurance carriers, and homeowners carriers and business carriers. But this area is really hit us hard. It's hit home because it's you know, taking a toll on all our community. Unfortunately, it's you know, they're I could comfortably say that it's, you know, they're thieves. They're literally lying to people to get them to buy these policies. They're convincing them that this is the right thing to do, and what they're doing is completely wrong. And again, I want to be very clear here. There are many phenomenal life insurance companies. We've dealt with so many of them on a personal basis, on you know, consultations for clients. There's some amazing companies. There's amazing products, but there's this one small area here that these people have been using, these Ponzi scheme, pyramid scheme, I want to call it, whatever they want to, I want to call it, because I can comfortably call it that, because it's exactly what it is. That they're literally fooling and tricking these people into buying these policies, convincing them that, oh, you know, you're going to get living benefits if something happens to you. And I mean, Eileen gave an example. We just had one where they were supposed to get into the six figures, $150,000. They offered them like $600. It's mind-boggling.
Exactly.
It's mind-boggling how crooked it is, how unfair it is, how misrepresented this policy is. So again, like I said, there's all these issues. There's issues of what you should do when you buy the policies, when you review the policies, and there's also, you know, when the claim happens, how do you open the claim on all these, whether it's auto, homeowners, business, life policies, whatever the case is. When a claim happens, you know, how you open the policy, who you have on your side, what kind of experts you have on your side. You know, the way we operate, you know, I give you examples on homeowners cases. You know, they have an adjuster, we have an adjuster. They have a contractor, we have a contractor. They have a structural engineer, we have a structural engineer. They have a contents expert, we have a contents expert. So we go toe to toe with them in every area where they try to minimize, underpay, unfairly deny, you know. And one thing about the good thing that, you know, what we do is we handle the claim from start to finish, including bad faith litigation. So let's just say that it gets to a point where you know, we're at a crossroads. You know, we're saying these damages are $500,000, and the insurance company is saying, no, we're going to give you $100,000. So, you know, there's a huge discrepancy. So what happens? You know, some of these public adjusters, well, okay, I got you $100,000. There's nothing more I could do. Life goes on. Sorry, too bad, too sad. And it doesn't work that way. You know, we litigate these cases. We do bad faith, insurance bad faith cases. So we handle the process from start to finish, including litigation. So, you know, again, like I said, like we all said, review your policies, review them again. Let us review it for you. Ask the right questions when you're renewing. Ask the right questions. You know, a lot of now, especially nowadays, where some insurance companies are leaving the state, some of them are increasing their premiums tremendously. You're going to have to look for new coverage. You're going to have to fill out new applications. Again, make sure you make sure you inform the agent or the broker of everything you have, of the value of your home. Make sure that they're giving you the right amounts. Make sure that they're giving you the coverage, the uninsured motorist coverage. You know, there's so much. I mean, literally, you know, we could go on and on and on about and giving you guys examples of what you should do and what you shouldn't do. You know, and we don't want to bore you too much with this information, but again, this might be boring information, but it's very, very, very important information if the time comes for you to put in a claim, or if something happens, a loss happens, and you have to go through your insurance company. And again, you know, friends or foes, I think we're pretty clear as to what our opinion is as to what most of these insurance companies are. You know, kind of again, our numbers 877-554-2226. 877-554-2226. Real quick, Nat, let's wrap it up. Last words, Natalie and Eileen.
Yeah, so I think that again, like Harout said, it's very clear. The insurance company is not on your side. Take proactive measures on your end. You don't want to ask for our help when it's too late. Just take advantage right now. We'll do the work for you. We'll tell you exactly what it is that you need. And just have the right coverage, have the right insurance company on your side, and let us help you. It's free of charge. So call us first.
Yeah. The one thing I want to say is, make sure you even if you can't read through the policies because they're, hundreds of pages long, call us first. Don't even buy it. Investigate a little bit. Don't sign on the dotted line. Study it up a little bit and see what's available out there. And as far as claim opening, I know how to touch on it a little bit, just for a second. It's so important to open a claim the right way. We have so many cases where we did not open the claims and it came to us after the claim was opened and it was not opened up properly because the agent on the other side, the adjuster on the other side will guide you into saying what they want to hear rather than what you really have to say. So make sure you call us first, whether it's reviewing an insurance policy or just, something has happened and you want to open up a claim.
Thank you, guys. Thank you for watching. Thank you for listening. Again, any questions, any concerns, give us a call, 877-554-2226, or visit our website, keosianlaw.com, or any one of our Instagram or Facebook accounts. Give us a call. Let us help you out. Like Eileen said, before anything happens, let's take preemptive measures and make sure everyone's got the proper coverages and the proper limits. Thank you, everybody. Thank you for listening, and we'll see everybody soon.
Thank you. Good night.
Bye-bye.